What's up, crypto kids, blockchain profit seekers, Bitsgap pros? How y'all doing? Just gonna ramble on a little bit, give my thoughts and opinions on a couple things. I had a bunch of slides and stuff I was planning to present here, but I just been so busy getting into reading about all the crowd loan stuff and digging into the backgrounds of every team and the tokenomics behind everything going on, and it's just a lot of research. And being a solo project over here, I don't have a video editor, I don't have anyone to help me really, except for the little bit of team that I have built up. And really, when I still had the bigger channel, I should have done a Telegram group back then. I could have easily made a giant Telegram group when I had the bigger channel, and instead I wait till I have a little tiny channel. But it's actually better because I really don't need to have a lot of people. I just need a few people to bounce ideas off of, people who are smart, this type of things. And that's what we got. You guys are all smart. And anyway, market, really quick. This is pretty big. I'm sure you've heard of this. For the second time this year, centralized exchange saw more than $1 billion worth of ETH outflow from exchanges. This is all the exchanges together, and the outflow is higher than it's been. 60% within 30 days is how much the price increased last time this happened. Obviously, there's the Bitcoin rumors of an ETF. Even rumors alone can send the price skyrocketing. But if an ETF did actually happen, that would be extremely bullish news. But other big bullish news is CZ, the owner of Binance, said, 2 days ago, he said, institutional money, guys, it's coming. A lot of it, and it's coming big. And what do we have on the other side of that? We have BitBoy Crypto and his, he always thinks that that we're... And Crypto Jeb actually came out with a big video just kind of debunking the whole thing. I know a lot about him that most people don't know, but we're not going to go over that right now. Anyway, Ben Armstrong, I expect the Bitcoin bull to top within 2 weeks of September 27th, one way or the other. This bleeds into October, so think about that. All in all, the cycle could wrap up before the fall ends. Take your profits off the table if you are in the green. We are right on track. And then, of course, he puts out, $10,000 Ethereum video in the next breath. But, he has this ongoing thing with the, it's not just him, but with he's just kind of the head of it, with the Bitcoin cycles and the manipulation that goes on, that they are going to do some sort of major tapering or major whatever and cause this whole thing to crash. And we're going to be, in the midst of an extremely bear market. And you could follow that, certainly. And maybe, could be that when all the traders go one way, the other thing happens, right? I mean, that could. But for me, what do? I look at the bigger market, and I complain that most crypto guys don't do that. They think that we're completely uncorrelated or something, or that they live in a complete bubble where they can just look at Bitcoin cycles. But you know what? Crypto, the bigger it gets correlated to the market. It becomes part of the market. Now, there may be a point in time, and I think that there will be, where that correlation decouples. And, in an extreme way. And it will be when everything else burns to the ground and everyone, all reasonable money piles into crypto, right? But there's 4 aspects we look at for the market, what's going on, right? The number one is the 10-year yield. The 10-year yield, what's it doing right now? It is kind of knocking its head against the upper range, but it's never spiked, right? And what we're looking for is if there is a spike, at that point, I run for the hills. I'll sell off freaking, a bunch of my cryptos, hide into into Bitcoin, buy a bunch of physical silver. But right now, the 10-year yield is not jumping through the roof. What's the other ones? The Fed's balance sheet. Is the Fed's balance sheet still expanding? Yes. It's expanding at a massive rate, which is going to push inflation, which means that we're in a risk-on environment, right? Okay, so we're looking to do things that are more risky and pile into assets that are risky. So What's the other one? Oil. Is oil crashing? No, oil's not crashing right now. If oil crashes, then we can look at the oil to crashing. What's the other one? The Dixie. Is the Dixie running for the hills right now? It is showing a little strength right now, but it's not crazy bullish. Let's remember, the dollar is debt, right? That's debt. And when the debt market, when people are running into the debt market, they're doing that because they think that there is, you know, the environment has become toxic, or they need to like run away, and so they pile into different debt instruments, right? Bonds and dollar, and the dollar is just a unit of debt, right? So the Dixie is a relative strength indicator. It is measuring the dollar's strength based on all the other rotten apples in the basket, right? Which is why we have the IMF going around and they force loans on people. They do all these things to make people basically dirty up their own currency, weaken their own currency, so that the dollar remains strong, remains the freshest rotten apple in the basket. But it is just that, a rotten apple. And so the Dixie measures the relative strength between where the dollar is and where all the other currencies are. So it doesn't really necessarily show like the dollar's buying power, inflation, how the crappy monetary policies that are going on. It just shows its crappy monetary policy based on everyone else's. And we make everyone take on loans and do all sorts of terrible stuff in order to not be on the IMF's bad side, in order to get loans, in order to, you know, have their way into whatever. We make them print money. Like, that's the first thing the IMF makes them do, make them print money. And if you think the Fed is not holding hands with the IMF, you're dead wrong. But we're not going to go into that right now. So my point with all this is the market is not crashing. The market is not about to crash. I think the market's about to go crazy up. You know, could we have some downward action in between them? Yeah, we're definitely going to. And with the way the market's been lately, where some coins boom and some coins drop, it's not like the whole, you know, we're not in the mode of a rising tide lifts all ships. We're more like the money's flowing over here and sloshes over here and sloshes over here, and it moves different things up in different ways. Now, what do we know about that? We know that the L1s, all those L1s that are having protocols that lock up tokens, right? Things that like yield farming, automated market makers, staking, all these type of things, lock up coins. Crowd loans is a new way, you know, with the Kusama, lock up coins and shoot the, you know, do great things for the supply and demand aspect, right? So my point for all that is we're not I don't think we're about to crash. I think we're extremely bullish right now. And even if you buy this BitBoy stuff where he says, you know, to the 27th, and I've seen his arguments, I've seen them, you know, they all make sense. Great presentation. Sure. Cycles make sense. We don't really have that much data to go off of. And the crypto market was so much smaller and not a part of the regular markets, right? It was like this tiny little thing that like a bunch of stock people came into and they all ran away from in the bear market. But now we have like institutions, we have NFTs, we have art, we have so much stuff going on that to think that this whole thing is just going to crash, you know, I could easily be proven wrong, but I'm not bearish in that scenario. Okay, moving on to grid trading. So I've been grid trading for a long time, for longer than I've been doing bots, right? And I actually did some, even with the earlier bots, like, you know, when I was running 3 commas and did Profit Trailer, I did all of them. I actually got to test some bots and was a bot tester for Zookle for a long time. And I had a founder's position there and was testing all their bots, and they had binary bots and all sorts of different bots, and ended up not kind of fizzling out, and they went down the road of arbitrage, and then the markets got too big and there wasn't enough arbitrage opportunities, and the whole Zookle saga is a long story. But if you were with me on my old channel, which most of you weren't, I used to do a lot of bot tests for binary bots. Anyway, so with crypto and my portfolio, I hold a majority of my crypto and always have in open orders on charts. I know everyone says you should have all your crypto in a ledger or in a cold wallet, and I do have some in a cold wallet, but I've never held most of it. Yeah, it's hurt me a few times. I lost money in Crypto Bridge, Cryptopia, and even before that. But overall, I've kept all my crypto on exchanges. I kept most of my Bitcoin and Ethereum on the Bitcoin Ethereum chart. And wherever the price was, I would just come in and I would add like if I withdrew from somewhere, a passive income platform, or, brought some money in and I brought it in, I got paid in Bitcoin. I immediately take that Bitcoin and I put it for sale on the Ethereum chart, 5% up. And then what would happen is like, I would get paid again, and that other one hadn't sold. Very often I'd come over and I'd get that extra 5%. Now I had ETH, but I earned 5%. I could sell it back into, do whatever you want, put it back on the chart. Very often I would just set it back down here. And then when the price would come and touch it, I'd wake up the next morning or come back a couple days later and that'd be filled. Oh, and I'd move it up here. I move it down here, and I trade around a core position, did a bunch of rebalancing stuff. But this grid trading thing really worked for me, and I would just load up through the bear season. I would load up buy orders and put in a whole bunch of like cheeky buy orders. I would do that in USDT, and I still, to this day, I have $1,000 in open orders. I have opened orders from signal groups from like over a year ago. They're still just sitting there, but which I should probably go close some of this, and sometimes I do, but. Very often what happens is like when the market finally swings or shifts or does something crazy, which we see all the time, then, I cash in, like everything changes at that point, and I start, getting, let's look at, or not a MOF. So see this big wicks here? So like these used to happen a lot more in crypto, and sometimes they would come way far down. And so I like leaving cheeky orders down here. I got some orders, 371, 392. So, somewhere in here, but you get a lot of these, right? And you get them both ways. Wow. Having a nice run on KSM right now. And you get it both ways. You get runs up, you get runs down. And so putting cheeky orders in, like orders that were way low, it was just something I did. I started building up from down here. I'd put in an order, my next payment, put another order, and I would just wait. And there was at times where I had, on the Bitcoin Ethereum chart, where I had it built up like grid, just wait. It seemed like it would never go reach those points, but it seemed like a good place to just store my Ethereum. And then whenever the market went crazy, Bitcoin ran first, Ethereum ran after, Bitcoin would come in and switch it all over. Bitcoin would run and switch all my Bitcoin over into Ethereum. And then I'd see that, oh, okay. And I put it back down, and a little bit later, Ethereum would run right after it. It would switch it all back into Bitcoin, and I had more. And I just kept growing my account like this, multiple accounts, multiple exchanges. And it definitely worked. I've turned about 4,000 into about $250,000 at this point. And I know I don't even like saying it out loud, but I've 100x my 100x multiple times. And, I just set it up to where the market, I'm catching fluctuations. It's the same thing that we're basically doing with Bitscap. Okay, all that was really rambly to kind of get to the point of what I wanted to say. That, yes, I keep things in open orders for long periods of times, but, that may not be what people are trying to do here. Because it may be that you're trying to, stay in cash and just earn more and more cash. And that's a little bit different of an approach than collecting crypto, right? So what happens in all trading is you end up with some bags, right? You put it into a position, doesn't go your way, goes the opposite way. It can be avoided. And then there's the great debate amongst all traders, and you can go into any, on the internet, get on DuckDuckGo and find, type in when to sell and never sell at a loss. And you watch every video along those lines, but you basically got two schools of thought, right? You have the school of thought of let your winners run, cut your losses quickly, right? And then the other school of thought is sell into strength, buy into weakness, right? So you have those two different schools of thought. Now, if you're in the first school of thought and you're earning cash and you're trying to get into a cash, you're trying to just not hold a bunch of crypto and you're trying to like flip it quick and just get cash and, more and more cash, you probably want to run with the stop losses. Like if that's your sole goal, I would think that the stop losses that they're giving you for wherever you're at, you probably want to run with them. As you saw in, if you watched the last Bits Gap corporate video, even he admitted that he doesn't like running the stop losses, and he's Mr. Stop Loss. You know, he always tells everyone stop loss all the time because, you know, he wants everyone to be safe, and it's safe for him to tell everyone to be safe and cut your losses short, right? But even he said, I don't like to run with the stop losses because the market's fluctuates around too much, and that's where I'm more in that boat. The boat of cut your losses quick and let your winners run is good if you don't have a lot of money, or you're looking to stay in cash. Like, I understand that a lot of people are kind of smaller. When you have smaller account, it makes it a little bit tougher to do some of the things that that I do in order to get out of bags, right? So I have found that the school of thought of tight stop losses, let your winners run, even using trailing stop losses on trailing take profits on 3 comma, and I've recently done like 20 of them on CoinEx, and same results. It's a trailing take profit, market dumps when it hits a certain price, you're subject to slippage. That's a lot different than when you put in a limit order and something has to come up and touch your order, because you're only selling at that limit. You're not market dumping anything. You have no slippage to speak of, right? So a trailing take profit does work pretty good, but it's not foolproof. And if you have tight stop loss, more often than not, it's going to push your trailing take profit up just a little bit, and then come down and hit your stop loss, and then move around and then shoot up, right? I mean, so often that's what happens. And it's annoying, but crypto is extremely volatile that way. And so anyway, you're going to end up with some bags, right? We all end up holding bags. We don't want a signals group that is just a bot collector or a bag collector. No one wants a bag collector. Bag collectors suck. Now, a lot of the older bots used to be bag collectors big times, because they were based off like the DCA bot on 3 commas, or you would end up holding bags, right? It would end up and inevitably buy something up high, the market would crash, you would go down low, and it would start fluctuating again, but your last buy that the bot did for you was way up high, and you would end up holding bags. It happened on CryptoHopter, it kind of happened on BitUniverse, it happens everywhere, right? It happens less with grid bots, which is nice, but it happens a lot with the old DCA bots. Now, there's this guy, Crypto Gnome, and he, like, back in the day when the crypto bots were first kind of getting big, and the whole thing was being developed, and then there was the Moomin Papa guy on 3 commas, right? Both of them had different videos, or a lot of videos, on bag buster bots, or how to get out of this situation where the bot, on a MACD bot, it bought way up high, the whole market crashed, now you're down here and you don't want to sell it at a loss and all this good stuff. And you're just sitting there holding bags forever, and the bot's running forever. And they both had strategies. I think the profit trader one from Crypto Gnome was called the Bag Buster, and Moomin Papa, when all of his information used to be out for the public, he had a whole bunch of bot. He used to have a whole bunch of information. It was classy, and he ended up taking most of it private, and you have to like pay for his little class in order to get access to it. But which it was worth it. He put a hell of a lot of time and attention into that. But my point is, they had different ways of, using bots to get out of a bag, right? So let's say you're holding the bag, and the idea of their bots were kind of similar, right? They used different techniques with DCA and MACDs and Bollinger Bands or whatnot, but the idea was basically the same, that you bought up here, and now the price is down here, but you want to, not sell at a loss, right? So they would basically find a way to get down here and trade these little intervals. Say this was a 5% drop. Say you bought here, it dropped 5%. They would set up a bot to do something like this, a little bit different because they weren't using grids, but whatever. And you would let it trade until you earned back to your break-even point or were in profit. So there's one way out of a bot, or one way out of a bag, is you take it and you take the crypto you have, you set it on a bot and you let it trade. You use this take profit, you turn it on, and say you're down 5%, you let it run until it earns its 5% and cashes you out, and you're out, right? I mean, there's a little bit of time that takes. Now over on CoinEx, the one to use would be this, if you come to, this is cool. They got this new feature, grid buy, and they also have grid sell. It's pretty cool. It's very similar to the Bitsgap one, but got arithmetic, geometric. Pretty cool just how it works. 2 to 10 grids to buy, and yeah, I like that. It's really nice. But another reason I like CoinEx is all the bots included, not just all the low fees, but you have a lot of different bots here for, to use, and they're free to use. You can use as many of them as you want. There is no limit, and you could use these to get yourself out of some bags, right? Use these as bag busters. The ones that would work for that are this grid trading, the spot futures arbitrage bot, which might be a little bit slower. And if you're using the spot futures arbitrage bot, make sure you keep a little bit of funds in your account in case you get margin called. It's very, very rare with this bot. Almost never happens, but just in case, be safe. Keep a little funds off to the side. Rebalancing bot won't work in this case. The other bots that would also work is this infinity grid ones, which I like quite a bit. I've been using it here, and basically, you just put in your and the good thing about these bots is you can use like all coin, or you could use half coin, half dollars, all that good stuff. But this infinity grid bot, it's been doing its thing. Threw some funds into there, and as you can see, it's up, let's see, 18.6% for a total of $59 in profit from a $319 investment. And so, the same thing, if you had bought this FTM up too high, up in this range, and it dropped down, and you stuck it in the infinity grid bot, even though the price may have never moved, it's trading all the little fluctuations for you and slowly gathering steam. Yes, this may take a while but it will at least get you out of the position and get you out of the bag. Now, as you know, I'm holding on to all my bags, especially with the trades that we got, because I think the market's going to easily take out all those trades and turn all those trades into cash. However, you don't want to wait, or if something down the road doesn't seem to move, or if the market kind of takes a little slight turn for the worse, I could take all these different cryptos, all these open trades that we have here, and these are the ones the bags I'm still holding from them. A couple of those are trades that I initiated, but here's the bags I'm still holding, and on other exchanges, on some of the other exchanges too. And a lot of that's because they were the better cryptos, and I took some of the higher levels or the higher positions, and that's where I want my money parked. I don't mind it being parked there. So I know that, if you're trying to stay in all cash and just, rebalance to cash and grab more funds, it's annoying to have all of these open trades and have them sitting there for so long. But, if it does take a month or so for it to hit, I'm just fine with that. And if you're not, these are your choices. Put that into a grid, double down and keep buying more and more as you're going down, or start using the stop losses. It might not be what you want to hear, but I think those are basically your only choice to get yourself a bag buster bot going. One of these infinity grids is working good for me, or to continue buying on down. I know a lot of people don't want to do that. And some people say, well, cut your loss and move it into something, move it over into something that has a chance to go up, right? If you cut this down, cut all these, sold them all loss, and piled into like the newer signals that had a higher chance of going up, might be an approach, but I don't think you're gonna last very long. And I do understand the frustration of, when you're out of capital, you're out of the game, and you're stuck there waiting for these to fill and watching new trades go by, but you're stuck in these bags, and it's extremely frustrating, but it happens to everyone. And, I know the old adage of people just going to say, well, just use better money management and use smaller positions. And it is slightly true, but, yeah, probably not what you want to hear. But A lot of great bots over here on CoinEx to use as bag busters, and that's part of what I'm really liking about being over here, besides the super cheap fees. There's that. Now let's go to binary options. I traded binary options a lot. I've taught my lady to trade binary options. She's really good at it. She might be better at it than me now. I've even taught some kids to trade binary options. The biggest problem with binary options is all the brokers are freaking crooked, and the Wicks that are on the live chart versus the demos is not the same. And their Wicks, if you go and compare them to like a MetaTrader 4 account, are much longer on the binary brokers live accounts. And so you got to be careful. But what we're going to talk about right now is Martingales, right? So the bots that I used to use for Zookle were called, they had a Martingale system involved in them. Let's, Martingale. I use Martingales. Now, a lot of what I'm telling you is, don't try this in traditional markets. This is for crypto in an emerging market. And like I said, as long as everything is positive and we have like the 10-year yield in the right spot, everything's looking bullish, then all this works, right? I'm holding on to my bags. I'm letting the bot be like a bag. I'm letting the signals be basically a bag collector to get me a diversified portfolio of excellent cryptos, right? Now, if they give us a signal that's something I don't like, then I might use the stop loss, or I don't know about, like I'm not very familiar with nulls, and we got a null signal the other day. I'm sure it's a great crypto. I remember seeing some videos about it. It's been so long, and I don't have time to research right now, but I want to take this signal. I grab the signal and I throw on that stop loss because I don't know that I want to have that in my portfolio long term. Now, I do like extreme money management based off kind of Martingales or the idea of Martingales. All right, let me try to explain really quick what Martingales are, or how to use them, or how I'm using them. And I just did another example with binary options, and when watching it back, I realized probably no one wouldn't make sense to too many people. So try to do this one more time. Now, real quick, this doesn't work in Forex, right? You get crushed. You ever try to do this in Forex? It might work in with stocks. It definitely works in binary options, and it works with crypto. However, I'm not telling you to do this. I'm just giving you an example, and it's just a theoretical example, and you can, just to get your imagination and your juices of your brain flowing of something that you might want to do, but, go about it your own way, do it how you will. And I understand this is, maybe kind of hard for certain people who, like I said, have smaller accounts or don't want to practice money management, but here's basically what an example of a martingale, right? Say we got a signal, right? And you got $100, and you're going to put $100 on this signal, add a zero if you need to add a zero. And the signal came in, and you have $100 you want to place on this signal, right? Instead of putting $50 on L1 and $50 on L2, I'll put $10 on L1 and $10 on L2, right? So now we got $20 rolling, but I'm planning on $100 for every trade, right? But if it just simply went up from there and instantly earned me profit, great, no problem. I got some profit. Sure, it was only on $20, but if I had 1,000, it would be $200, right? But the point is, you keep a whole bunch back, and this is called like extreme money management, or DCAing largely. So okay, so we have $20, we have $10 on signal 1, and we have $10 on signal 2, and the thing goes down a little bit, right? So say it goes down 5%. What I'll do there is now double my bet or triple my bet. So say it went down 5%. I got $20. I got $10 on each of those signals. I'll now add 10 more, $20 more. If it goes down 5% from there, I add $40 more. If it goes down another 5%, so where are we at? 40, 50, 60, 70, 80. We're now, we're at $90, right? So we put in the original 20 at L1, then another 20 at, $10 at L1, $10 at L2. It dropped 5%. We threw in $20 more. We're now at 40, right? It went down another 5%. I take another 40 and put it on there. If it goes down additional 5%, put in the last 10 bucks, and you can see what I did there, and I wait for that to go up, right? Sure, all of our stuff was invalidated, all of our signals were invalidated, but in this bullish market where things are going up in the long run, and I'm trying to collect this diversified portfolio, this is how I'm kind of running these signals. I'm doing these martingales on it. And I did that on graph. When graph, went down, by the time we hit the original point of where we took the signal at like $1 or whatever, I'll be in full profits. And when it goes up and hits the rest of them, those will be even additional profits. So yes, you could cut your losses, you could exit out or whatever, but for me, I'm generally do these martingale types of things, right? Like Adam, I keep going in, I keep adding in as it goes down. Anything that's going down, I'm adding to my bags big time. And so, again, another example, you took a signal, you put 10 bucks on L1, or let's, say it's you're putting 1,000 on the signal. You put 100 on L1, 100 on L2. If it drops 5%, you put in 40 bucks. It drops another 5%. You put in 400 bucks. It drops another 5%. You put in the rest, right? That type of thing. As it goes down, you leave money on the side to dollar cost average in to buy it lower. That's what I do. I'm not telling you to do that. You can run with the stop losses and, take the path of cutting your losses quick and letting your winners run. You could do that. I don't think that really works that well, but over time you'll be in advantage, but I have a feeling we'll be doing a lot better on the other side. It would be nice actually to one, set up some demos accounts, take one set of signals using this strategy, one not using this strategy, take another set using stop losses and another one just not using stop losses, and do some serious, long-term tests on those. That would take a lot of work, but might be well worth it. But I think you get the martingale strategy, right? You just keep, you exponentially add to your position as it goes down. That's basically it in a nutshell. And eventually it pops up and you win, and there's that. So, and like I said, I'm going to go in much deeper detail on these CoinEx bots and how to use them as bag busters. I like this avenue of thinking, and I want to get some more information out there on it. So anyway, there's that. Anyway, I think you get the idea that as it goes down, I just keep doubling up. I keep loading into things that go down. And that is something I've always done. I am way more a sell strength and buy weakness. And that's like you see me all the time, especially in Bitsgap. I always talk about how I come here to my balance. I come over to what's up, and I level it off, right? Level it off at 1,000, like this GRT, right? It's at 2,000 here. And now I could take 89 bucks off of that, right? And because I'm selling the top, and then I put it into whatever has gone down the most. It works really good on, doing the list trading on your watch list. You come to what's up on what you own, take all the cryptos you own, you put them in here, you find out what's up, and you sell it. I know it's hard to sell when things are up, but that's what you do. You go around, you take some high performance blockchain, and yes, I did sell a little bit of it. Look, Orion, it's up. Should go sell that if I'm over 1,000. And I used the Orion here. What I've done is this was actually $400 worth of Orion that I bought when the market was super crashing, and now it's up to 1,000, right? So now that it's up to a position that I like, I'm going to start trading around a core position with this. So see, I have that 1,000 there. Go to the USDT chart and come over to your trading, and I'm selling strength because Orion, look at it, see, that's beautiful. See that? That's like almost at all-time highs, right? So let's core position trade that on down. And you literally is just another, it's basically like the same thing a rebalancer bot does, right? It takes what's pumped and it moves it and it puts it into what has gone down and constantly rebalances, which is the same thing that like Ray Dalio does for his portfolio, right? I'm going to keep 5% in Bitcoin. As Bitcoin goes up and up and up, he's selling the Bitcoin. If everything else was going up more than Bitcoin, he'd be buying Bitcoin, but he constantly rebalancing his portfolio. Same with what we'll do here, right? So I have my my Orion, I go to market, I go to sell, and let's sell 10% of it. That's $100. That will get me back to about 1,000. Let's go ahead and sell that right now. I've now sold the ORN. I sold strength. I sold weakness, right? Now, if ORN was down here crashing, I would be buying it right now. This is the same thing I do with these signals. Now, it was asked, is the TA invalidated that they gave us for a signal if the whole market crashes? And the answer is definitely 100% yes. But if you believe in the crypto, the fundamentals haven't changed, right? And the signal group definitely is crossing fundamentals and technicals. So let's say it's in a triangle. And the way I trade, all triangles, pennants, flags, all of it, I trade one way. You have your signal. If something breaks out the top or breaks out the bottom, then that's your signal to pay attention. The next candle, if it closes outside of the triangle, you put in your long or your short because it should continue on that way. You put your stop loss right up close underneath where the last candle was. You take the measurement of the biggest candle and you make it go that high up for your profit. We could do a whole different class or a whole different discussion on trading triangles, but I love triangles. So when that pattern is gone, or when the whole market crashed, then yeah, that triangle that we're basing everything off of is completely invalidated. Same with all the other TA signals that you may have used in order to get the signal to begin with. They're all invalidated. But the fundamentals aren't invalidated. If there were some sort of fundamentals that they were finding off of. So my point is, you might want to use the stop losses, but I'm not using the stop losses, and I don't plan to until this market changes. If the 10-year yield spikes, or if Bitcoin crashes or something like that, yeah, I might use a lot more stop losses, but I'll probably just buy the dip. That's what I like to do. When it dips, I buy, and when it goes up, I sell and continue selling into strength. So it's probably not what you wanted to hear, but you can get out of a couple bots. You could use bots to get yourself out of it. But for me, I'm just waiting, and actually the lower it goes, the more I buy. Unless I don't know about the crypto, then I'll use the stop losses. Super, super long, rambly video. I don't know if this helped anyone, and I should have wrote down a lot more and got my slides together, but I just got too much research going on, and I should probably redo this video later on in a much more professional way. But appreciate you guys. Catch you on the next one. Jeez, I'm out.